Welcome to the Business Podcast, where we interview professionals across all industries. Hey, it's Simon. Welcome back. Today we have Andrew Romans, a successful venture-backed founder turned successful VC, who's also a three-time author and now host of his own VC podcast called Fireside with a VC. Andrew, it's great to have you here with us today. How are you?
I'm doing great, Ira. Thanks for having me.
Absolutely. Could you kick us off? Tell us a little bit about yourself and maybe share something that most people wouldn't know about you.
Sure. I guess I'll start with something not everybody knows. I'm an American, but I lived for 15 years in Europe. I finished up high school in Paris, France, where there were 40 nationalities, half the classes in French and German. I also speak German, and I'm married for 21 years to a woman from Slovakia. So I can kind of speak Slovak. So I've got a little bit of a connection to Europe that way. I guess a little bit about myself on the professional side. I started my career in the Unix software, enterprise software space in the 90s. And then I founded a company myself called the Global Tele Exchange, which went through a couple $100 million of venture capital funding when I was quite young, and then went to IPO at a $1.2 billion valuation and came crashing down along with the dot-com meltdown. And that's really what got me into venture capital. So I knew a ton of VCs, went through 5 funding rounds, and it was VCs who asked me to join the board of directors of some of their companies and help them raise funding during the nuclear winter that followed the dot-com crash. And we can talk about it later, but now I'm investing out of my third venture capital fund, 7BC Venture Capital. And there we are. That's my quick speed story.
Well, thanks for sharing that. And I think it's good that you had that unique experience through your education over in Europe. It might have given you an edge. And I'm curious, what got you interested in starting Global Tele Exchange?
Yeah, so I went to Berlin for a year as an exchange student, and I was pretty serious about not speaking English with anybody and only speaking German. So my German's good. I almost have like no accent when speaking. It's just my grammar that sucks. But I then used that to get a job selling fiber optic cables and even the professional services. We would dig the ditch and build your entire wireless network or your fiber optic cable network in Europe. And we were even in some crazy places like Sarajevo in Bosnia Herzegovina when it was the S4 time of the conflict. So like there were people shooting guns and stuff. It was just, I must have been very young to be crazy enough to do that, but it was a lot of fun. And when I was selling the fiber optic cables, unless you're the government, you got to say, hey man, this is going to cost you like $300 million. If you got that kind of money to pay for this. And I realized that a lot of the telecom operators in this kind of post-deregulation world that were building fiber like crazy, they were pre-selling the cable. So let's say that, you, Ira, want to build a cable from New York to London, like Global Crossing. You would sign contracts with people that say, hey, as a forward contract, contingent upon the cable being ready for service and operational by like next year, March, you have to pay me $5 million for a capital lease on a fiber pair. So people were pre-selling the cable. So I had the idea that, okay, everybody needs help pre-selling their telecom capacity. Why don't I create a website called the Global Tele Exchange, the GTX, where everyone can post offers of what they have to sell on the spot market that's available now, which is like a perishable commodity. If you don't get someone to pay you today for that fiber, you're never going to get someone to pay you tomorrow for that fiber yesterday. So we were doing like Christie's and Sotheby's big multi-million-dollar trades every day. And we were doing trades for the future market of pre-selling these cables and all this bandwidth capacity. So we kind of got into a lot of revenue quickly without much investment at all. And so like that was the genesis of that company. That's how I came up with that idea.
And that's looking at the way you explain it, it seems like a very opportunistic idea that you came up with because you had that industry insight and you were in the middle of it all.
Yeah, I mean, the truth is, a lot of the people were like a couple Harvard MBAs raising money, trying to build a network, and they had no experience on a technical side of even how to plan a network and build a network. Where that was like my technical background, so I was able to really kind of take over the network for some people, and then do it in a very efficient way. So if like IBM was trying to charge you a lot of money for this same bandwidth that's all on the same cable, why overpay for it when it's all on global crossing anyway? So we would kind of do a reverse. I'd get like 20 people putting in bids to sell you that cable, and they all have to go down, down, down on price. So if you are buying your network build through us, you're getting like network planning expertise, but also knocking millions and millions of dollars off your price. And then the seller would pay us a commission. So, I mean, imagine, selling townhouses in Brooklyn Heights every day for many millions of dollars and getting like that Christie's Sotheby's, fee on every single deal. So we ended up pivoting. We ended up buying our own telecom switches. So I got a $25 million vendor finance agreement with Lucent. So Lucent, that's like Bell Labs invented the telephone. We had basically like a credit card to spend up to 25 million in the Lucent store buying their stuff. And then now the trades were being met on the website, going through, debiting and crediting bank accounts, which we controlled. There was no online banking back then. We had to write that software. And then it would flow through for provisioning over our network. But anyway, let's not lose too much time. It was a bit of a technical, it was kind of B2B telecom exchange, if you want to throw some buzzwords at it, of what it was.
Very cool. And you talked about how you flowed into doing venture capital yourself and sitting on boards. What would you say has been some of the unique wins or stories that come to mind when I ask you about that?
Yeah, well, it's been a really active summer. It's amazing how the pandemic was kind of an accelerant for all the high tech VC agendas, and then founder backed agendas, and then this summer, so just in June, July, and August, a bunch of our portfolio companies have raised huge financing rounds. So Superhuman, I don't know if you've ever heard of it. Superhuman, it's Raul's follow-up company to Reportive, which was a great deal. And it basically lets you do your email twice as fast, if not 1,000 times faster, better, more zen. Once you start using Superhuman as your email, you'd be paying anything to not have to go back to Gmail or G Suite. But that we invested in that company the first time at an $8 million pre-money valuation. They just closed a $75 million round that was just announced a few days ago, led by institutional venture partners, IVP, with participation from Tiger Global at an $825 million valuation. They had Andreessen Horowitz, first round capital, all came in after us. Another one is Nihilus. It's another one of our SF companies. We were in that, I think it's 16 for the first time. And we often invest continually at higher valuations, but they just closed a $115 million valuation or financing round. So 115 million fresh capital into the company this summer, led by Tiger. So all these hedge fund guys are coming into our space. Super Coffee, again this summer, raised 70 million from Durable Capital Partners and T. Rowe Price. Again, hedge fund people coming into our neck of the venture capital woods. We have another one that just signed a term sheet for a $65 million financing round. So it's been kind of boom, 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 big late stage kind of billion-dollar valuations for a bunch of our early stage companies that we were in at very low valuations. So these are like 50x, 100x returns that really bring you to like a cash on cash 12x fund. So people that put in $1 million in our fund are going to get $12 million back, we think.
Well, congrats on those really great opportunities that you and your team had sourced and decided to participate in. Are there any interesting stories around how you might have, come across those deals or other deals of high return?
Yeah, sure. So Superhuman, we invested in a company called Partender with Nick Kundera, and Raul's actually Nick's cousin. So, we funded bartender, and we became really good friends with the CEO. We try to get our network of LPs to help everybody as much as possible. We do something where people that invest in our fund are a mix of kind of small-time, regular, accredited angel investors writing small checks in the fund, up to large family offices, institutional investors, and even large corporations. So most of the money is coming from the big investors, but we have a whole bunch of these people, and I think that their check might be small, but their value is important. So, somebody might introduce someone that gets them on your podcast, or everyone's got their network. So we have these events that we do. We were talking before this podcast about Miami. Miami is one place we do it, but we do them in other cities as well, where we try to get as many of our investors in the fund together in person, where we're just like food, beer, wine, soft drinks, networking, coffee, and then as many of our portfolio companies. So the bartender CEO was meeting a lot of the people whose money that we are investing. And those people are all just trying super hard to be helpful. And they even start you find out later that the CEO of Bartender was meeting in the homes of a bunch of our large, big tech titan like VMware, Apple, Facebook investors and Google people. And they're helping him a lot. So usually the VC is trying to help as much as possible. We try to get our investors to help the portfolio companies as much as we can. And, they want to help people. It just helps more if they're aligned. And so Nick had told Raul, you might want to consider taking these guys in because we like them a lot. And once I heard this was the guy who founded Rapportive, which I was a huge user of, I was like, oh man, I want to meet this guy. And then when I saw the pitch, I said, geez, I get so many emails. It's very hard for me to just deal with email, period. And when I saw his vision, I look at every email deal I could possibly see, and I just thought this is not too much of a forklift. People can gradually start using more and more and more of the feature set. And I thought, this guy is going to be able to raise money from investors. I mean, he almost had me at hello. Love the company's building a huge vision, could be a $10 billion company, minimum $2 billion company, I think. And he's going to be able to raise the money. He's going to be able to recruit people during a talent war. And he himself has the technical ability to make this product. He sold Rapportive to LinkedIn for, I think, 15 million. And so I thought getting in at 8, I don't think he's going to run out of money. I think he's going to hire people. They're going to make this product. It's going to be great. But worst thing that happens is we sell to LinkedIn for 15. And I kind of have downside risk protection built into like a moonshot lotto ticket investment. And so we've just been super involved with the company. I love to try to get him to make stuff that I want myself to use. And he's been a great CEO. I think Raul's going to go down possibly as one of the great design entrepreneurs up there with Steve Jobs.
That's phenomenal to hear. I really appreciate you sharing that story. And we were talking about this a little bit earlier about the concept of corporate venture capital. Can you talk a little bit about that?
Absolutely. So I was a recipient of corporate venture capital. I actually, on top of the 25 million of vendor financing I had, which is like the ability to buy stuff and pay for it later from Lucent, and these telecom switches can run you $5 million really by the time all the bubble wrap is on it. I raised money from Lucent Ventures, which was investing primarily for strategic returns, not really looking to make, a big multiple of cash. What ended up happening was before kind of the world declared war on Huawei from China, after the dot-com crash, the only guys that would give you vendor financing were the Chinese. And so you had ZTE and Huawei were getting money from the China Development Bank, basically the Chinese Communist Party or the government, the people of China, and they would sell telecom networking equipment around the world. And you don't have to pay for it yet. Once you build your network and you have revenue from subscribers, then you use that to slowly pay your debt down. So you pay every month to Huawei and Huawei pays back the government. So when Huawei approached me saying, Andrew, you're the only VC we know in Silicon Valley many years later, could you advise us on forming our corporate venture capital business unit? And I had published a book through McGraw-Hill on venture capital that was rather all-encompassing in general, and the book was too long, so I had to cut a lot of it. And one thing that was easy to cut was I said, look, let's cut the whole corporate venture capital CVC chapter. And that might be my book too. So when Huawei came along saying, well, we want to pay you to advise us on this, I said, perfect. I will interview the top 20 corporate VCs like Intel Capital, Microsoft, Salesforce Ventures, all these kind of, corporate VCs. And I'll ask them how they do everything. What would they do differently? What do they not like? What are the problems? What are the good things? How are they innovating? What are the pitfalls to avoid? And I took all that and kind of delivered that to Huawei. And then I let another kind of 2.5 years go by. And I thought I knew everybody, but now I had people like Total, and Chevron, people I never heard of that I didn't even know, asking, can I be in your book and share a story? So I actually have 50 case studies in that book. And I think corporate venture capital is incredibly important to the viability of, not just the corporates, but even countries. I think so much is changing with technology right now that it makes sense for Intel and Microsoft with Moore's Law trying to, make the chip twice as fast every 18 months. And for Microsoft wanting to keep, getting you to upgrade your PC and buy a new one and get a new version of Windows. They kind of together have that upward spiral. But now like Campbell Soup, John Deere, everyone's got a corporate venture capital business unit because there's technology in just every single business. I think that using software to automate human workflows and to access data that's in the public, but they're not using, to make decisions and to access their own proprietary data and clean it, structure it, run it through AI models and machine learning. That, how long does it take to get a mortgage in the United States? It's like 90 days. We funded a company that's got that down to like 3 days. So all this kind of automation, seismic change in the way business is done, the way healthcare is delivered, and the way people read documents, having software read 900 documents in a second that required a PhD to be reading before. All that stuff is relevant to corporate. So I think that corporates need to access external innovation to benefit from technological changes. And the startups need access to corporates to do a trial, to get an enterprise deployment, to get them as customers, and even to get them as M&A buyers to acquire their business. So I think there's a very interesting opportunity for large corporations and startups, and then even limited partner investors seeking to make a financial return. So we've kind of positioned ourselves right in the middle of that, where we advise large corporations on their CVC operations, and we'll do that like as consultants. And we walk away with relationships with the people that are just reporting right to the CFO and the CEO of the biggest 500 companies on the planet. And we're able to introduce our startups to these guys, for all kinds of business acquisition, customers, stuff like that. And from time to time, we get them to invest in our VC fund. And, they're able to access the startup innovation that they could never get trying to invest directly in those companies.
It's certainly a very unique position that you and your team have put yourselves in order to be privy to that insight from the top companies, while also giving them insight into what startups are doing. So it's good to hear that. What would you say has shifted in terms of the mindset of CVC from the corporate standpoint in terms of taking that more seriously? What do you think has really clicked for them to say, we need to give this more of a deeper thought, a deeper look?
Well, I think almost every decently large size corporation has a corporate venture capital business unit or is coming up with a strategy to launch one right now. There's just very few companies that would just completely have no strategy for venture capital. If you look at Cisco, John Chambers, when he was running it, he would invest in like 50 to 100 different VC funds and have the LP strategy. So he would just invest in those funds and then say, this is what I'm looking for. If you see anything you think we should be aware of, we want to hear about it. We want to see it. So it became like an extension of their research and development, their business intelligence, their product roadmap, everything. Whereas like AT&T was kind of Bell Labs Lucent was trying just to hire everybody and invent everything at home. Where Cisco had this more West Coast California, we're going to use all the startups and the VC ecosystem to our benefit. And so if we find that we're going to do business with that company, so that the VCs are introducing the portfolio company and Cisco is going to be a distributor or a reseller or a customer to buy it, use of the product or service, they would say, look, we're about to double their revenues. Gordon Gekko in the movie Wall Street would say, that's a buy signal with insider trading information. I should invest in that company directly. So they would kind of invest as LPs into funds and then meet the startups and cherry pick and make direct investments. And then that would lead towards their corp dev M&A team actually full out buying these companies. So Cisco, I argue, would not exist if it were not for their corporate venture capital and M&A corp dev strategy, which worked beautifully together. And at one point, it was the biggest company by market capitalization on the stock market. I think they hit that in 2000. So I think for what has evolved, I think that in the olden days, like the ancient times of the mid 90s, early 2000s, you would see CVCs would get shut down after 4 years. They just stopped doing it. They were kind of dysfunctional on the investment committee. They have all these committees. The CFO has to sign off on every single investment. And so like, if we're just doing a small follow-on investment into a company, the CVC can't make a decision to invest or not invest, and the round closes without them. So they were notoriously slow with very dysfunctional IC investment committee. They've got these really, the CEO wants to read everything like he's Jimmy Carter, and he's out buying some power plant in India for $2 billion. While he needs to read the memo on a $750K, pro rata equity right to maintain his ownership percentage on something. So it's kind of ridiculous. Now, they also used to only invest in kind of Series C late stage, where they often have to get a business unit being willing to do business with a startup before they can get off a cash investment. The big changes, you're seeing CVCs operate and behave more and more increasingly every day like a financial VC. So if you talk to a lot of CVCs, they'll say, oh, we're investing for financial returns more than we are for strategic returns. That might be not true, and that's what they say, but that's how they're positioning themselves and they're trying to behave. And some of them actually are. Like, you've got some companies are relatively new, like Salesforce. We have like Mark Benioff, used to work for Tom Siebel at Siebel Systems in Oracle. And that guy just has the culture of an entrepreneur and a VC, and he runs Salesforce like a dictator. So Salesforce Ventures is probably more like a financial investor than a strategic investor. But if you really look at what they're doing, they were just getting into everything. And so there was like nothing happening that they didn't know about. And so they were benefiting in a very strategic manner.
That's great insight that you just shared. And when it comes to your experience early on in your career, it seems that telecommunications has probably been a unique story that has unfolded for you as you're looking at what's going on globally right now. What other industries have you seen when it comes to enterprise SaaS or software technology to be really unique within the target companies you're looking at and considering, given what's going on globally?
Well, I think we're at a point in history where there's all these kind of Lego blocks that enable startups or large corporations to rapidly build out products. And I think that just if all you do is go to work every day and say, I want to automate this as much as possible with software, and how are things done today? There's just a lot of ridiculous human components, like some lady picks up a fax off the fax machine, walks across the room, enters some information, asks someone for some information, waits for that to come back. I think we're at the point where we're starting to see like application program interfaces, APIs, just being written like crazy. So every data set can talk to every other data set. And, it's kind of like Zillow. This is public information. You can go to the county clerk or whatever and find out what I paid for my last house and when I sold it. Or you can get software that just puts it right out there. And then it becomes really, really valuable. Someone else will be using that software for data. I don't know if you read Liar's Poker or Moneyball, or saw the movie with Brad Pitt about Moneyball, where instead of just like watching high school kids play baseball and try to be a scout or paying the most for the most famous baseball player, these guys were just purely data driven. They were looking at like 5 stats, like RBIs and things like that. And just based on the stats and the data, they picked a team and they put it together like an orchestra of like, all right, that's the violinist, that's the pianist, that's the cello player. And they, the Oakland A's came up to win the World Series. That same guy went to the Boston Red Sox and boom, the Red Sox won the World Series. So imagine if you took that to today and you got like, just think of like European football, soccer. Imagine that you get video of every single soccer game in South America, Latin America, from Nicaragua, everywhere. And the video is like autonomous self-driving software or Chinese Communist Party surveillance software for security. You're watching every single player. You're watching how long it takes his elbow to recover from an injury. Like you're getting like 1,000 points of data continuously on every player. Now imagine that's like Mark Cuban for his team that he's staffing with, like watching every single player, not just 5 data points. And basically Mark Cuban's going to crush everybody if he's the one applying all this AI, self-driving, autonomous supervision type technology. Basically, that's every single industry. I think like every single industry has the opportunity to digitize and apply technology to give themselves the Oakland A's, Boston Red Sox advantage. And then, of course, there's the guys who are slow to do it. So if your corporate culture is like a 200-year-old Japanese company, you might just get crushed unless you can somehow think like Jeff Bezos, who does lots of experiments. He's funding lots of experiments. And if it really works, he keeps it and becomes like a monster-sized company like an Amazon. So corporate venture capital can be a way for someone who's just natively conservative, old Japanese guy to be behaving like a more dynamic, Jeff Bezos. The CVC could actually be injecting Jeff Bezos serum into your DNA, your bloodstream, to get you to be a beneficiary, not a total victim of all this technology change that's happening around us. So we want to back these startups that are going after big industries with this sort of data-driven, software-driven technology. Now, talking about some of the companies like Super Coffee, Daily Harvest, we've made a lot of money investing in some strong consumer brands that just had phenomenal corporate culture, giving users what they want with very strong CAC to LTV. So the amount of money they spend to get a customer, they get that money back in a couple of months, and they just have a huge, positive unit economics. And if we can get behind those and get our network to support them, they'll make room for us to invest in them. And we hope to continue to make a lot of money in some of those.
Yeah, I like the way you expressed that right now. And going back to your earlier points, I could feel the weight of displeasure when you talked about someone moving over to the copying machine in order to get some information. And you're absolutely right when it comes to software, the need to find these efficiencies and drive value to the larger market.
Yeah, I mean, almost everything in life is like we're in the cave with cavemen. Like it's like we're cave people here. Like the way just think of the Department of Motor Vehicles. What a disaster. They should just like nuke the DMV, right? And start from scratch. And then sometimes I remember I was a keynote speaker at Startup Istanbul in Turkey in 2016. And in order to get my visa, you just go to a website, enter in your information, boom, and it's done. Really cheap, really fast. You go to get a visa to go to Saudi Arabia or China, you spend the whole day in some horrible DMV type situation. And it's just like expensive, total waste in everybody's time. Like digitize that like the Turks have done. This is everything I see in the world just looks like, my God, we're doing this like total idiots right now. There's just so much opportunity for startups and for large corporations.
Certainly a different perspective that you have being an entrepreneur and being exposed to all these innovative companies. Perhaps, given what you said, the most interesting one I've come across so far that I think has really interesting implications for expanding the amount of media out there is a company you might have heard of called Flawless. And they have this film dubbing with the use of artificial intelligence. And I think that's going to be amazing to experience a movie in a different language, but spoken in your own chosen one. Is interesting. Have you come across any unique companies so far that you're a fan of from a distance? Or
well, I love the name Flawless. I think Flawless is a badass name for a startup. That sounds very cool. I think, you know, the idea of interacting with your iPhone by tapping in it, like unlock it, then tap it, as opposed to speak to Siri or speak to Alexa. You know, I think that natural language processing is going to be a huge thing, and we've got a bet on Kindi, which we think is the best company in that category. But the way Google processes a search right now is kind of like in caveman times, and the way you can talk to a device, even like with Superhuman, I think that we shouldn't have our data in Salesforce in like a customer, like a database like Salesforce. It should almost be in like your email. It should all just be kind of integrated. And you should be able to say like, hey, find the contract I had with Ira on raising capital for our fund. What was the agreement that we have with that guy? And you should just be able to talk, and it should be able to, you know, kind of search everywhere. So I think search combined with data sets, combined with human intelligence, putting in if this, then that, you know, kind of like Palantir, Joe Lonsdale's company Palantir really showed what the future could look like, where their technology found Osama bin Laden. So they started off saying like, if this, then do that. And so it's like, if you've ever received a phone call from this terrorist and we have him on our list, that's a data point. If you've been GPS located in a hot mosque in London where they're, you know, they're making people, they're radicalizing people, that's a data point. If you've ever been to Somalia in the last 5 years, that's a data point. And then all of a sudden the software is tracking all this stuff real time. And within seconds, there's like men in black following some guy around somewhere in the world. And so they're kind of triangulating information. They then figured out that if we can find Osama bin Laden, we can probably find insurance fraud. You know, like 5 guys go to Vegas for like a bachelor party, all from the same high school. And then a week later, after the hot tub, they're all submitting claims that their pickup trucks have been in car accidents, and it's fraud. And like they were able to like put all kinds of crazy information together that like a human can think of what to search for, but there's no time in the world for humans to be doing the private investigation of all this stuff to find that. So I think that, you know, applying this sort of mentality to businesses is just terribly exciting, you know, right now.
Definitely, especially when the implications of what the technology can do from a security standpoint or for value to the market is so high that more and more recognize it. And that kind of,
and I would just say one other thing, Ira, is that like, you know, for people listening to this, whether they're entrepreneurs or investors or large corporates, when the internet first came out, people were like, all right, let's do something that people do in the real world on the internet and we'll all be rich. So, you know, how do people find someone to date? Let's do, you know, match.com and do dating online. How do people buy dog food? All right, let's get pets.com. And, you know, women don't want to walk through Manhattan in high heels with a huge thing of dog food on their back. That was kind of like, let's do stuff online. Now people are kind of saying, how can we digitize this entire workflow? How can we access data and do this way smarter and way better? And so just kind of rethinking these workflows. And there's still a little bit of a component of do it online. We're investing into a company in Boston right now that has college kids are tutors for high school kids. So K-12 students that need to hire a tutor. And they basically said, we think it can be done better online than it's done in person. And it's not just about, you would think, if my wife at first was like, oh, don't invest in that company. I don't want our kids getting a tutor online. I want to pay for having a face-to-face. That's got to be better. By the time you look at all the stuff these guys have made, like your Flawless that could automatically translate stuff, not least of which recording the sessions, and the kid can play again this calculus thing again and again as many times as he wants. All of a sudden you realize, oh my God, this is hands down, the online tutoring is 1,000 times more effective than the in-person tutoring. And I think that you're going to see that for just so many things. Digitize, put it online, and see if it's more effective.
Absolutely. Absolutely. Well, it's been a pleasure speaking with you, Andrew, and getting your insights and your thoughts and opinions. And until we speak again, perhaps you could share a parting thought.
Well, I would say venture capital doesn't evolve at the same pace that most industries do. We've been looking at doing this for a very long time, and we're finally putting a 7BC venture capital fund on AngelList using 506c crowdfunding regulations, and kind of opening it up to people to put small investments of as little as $25K into that fund, where in the past, for me to talk about investing in our fund, it's a violation of the ban on general solicitation, with just basically the regulations. So we're very excited to see what happens. We're going to be doing that later this week, where people can come to AngelList, find 7BC Venture Capital, invest in the VC fund, which will be co-investing with Sequoia and top VCs the way we do. And they can also join our syndicate and invest on a deal-by-deal basis in some of the deal flow. We can't always do a syndicate alongside with the fund. A lot of the deals we invest in are just oversubscribed and there's no time. It just doesn't make sense. But sometimes we can allow syndicate people to co-invest with the fund. We'll open it up to our LPs in our fund first. If it's not fully subscribed, we'll just put it out on the syndicate. Our fund typically invests in late seed and Series A and B, where we think we can continue to make a 12x cash on cash return. So our first fund is a 6x cash on cash, fund 2 is 12x. We think that we can do better than 12x, but we've not been investing in these late stage rounds, like last money in before an IPO, when we only see like a 1.5x or a 2x or even a 4x. Even a 5-6x is doing damage to the performance of our fund. So we think these SPV syndicates is the way to do that. So we're keen to grow the network of people that can invest in our deals all the way up to late stage pre-IPO Series C, D, E, F, right up to exit. And for somebody to make to 2x their money in 12 months or 5x their money in 2 years might make a lot of sense, where it's hurting the performance of our fund. So we're excited about more people being able to support our companies, attend our events, meet our founders, use their different orthogonal networks to support these companies and get more results. I think a VC can write a check. You can try to work 1 million hours and help all your portfolio companies, but it's very exciting when we can get other people, financially aligned to want to make these companies as successful as possible. So that's kind of a parting thought of something we're excited about.
Absolutely. Certainly looking forward to speaking again, Andrew, but until then, it's been a pleasure.
Okay, my pleasure was all mine. Thanks for having me, Ira. Take care and have a great day.
Thank you. Thanks for attending the Business Podcast, and stay tuned for more episodes.